Good morning, traders. It is Monday, October 27th. Hopefully everyone had a great weekend. Taking a look at the charts, we've got equities trading sharply higher up this morning. We've got the NASDAQ up 1.3%. If we take a look at the NASDAQ futures, nice pop there, gapping up. Not a big fan of gaps to the upside when we're in an uptrend because they generally like to backpedal and fill and fade back in and fill before they want to go higher. We're getting a little extended from the 5-day, but overall, the market continues to want to run higher. If we take a look at the S&P 500, it is up 0.8%. And if we look at the Russell 2000, it is also up 1%, testing some highs here. So definitely money piling into the risk-on assets, moving into equities. We are seeing it move out of the risk-off assets, which are bonds. Bonds are down about 1/3%. We're seeing gold down 2.25% to the downside. I might end up having an expansion move to the downside to go down towards the 50-day moving average potential. We'll have to see how this shakes out. We may see the precious metal space. It is set to gap lower, gold, silver, and miners, and the stock market is set to gap higher. So we might see kind of an exhaustion move, meaning all the metals space gaps lower and then starts to rally back, and we see all the equities, all the stocks gap higher, and they start to pull back to fill those gaps. So we might see a little bit of a short-term pause or pullback in the equities market while maybe the precious metal space starts to get a bid again. But right now, we do have fear carrying over from the recent drop in the price of gold, silver, and miners, and that is carrying over to today. And people, I think, are set to kind of get spooked out today at the open. If we take a look over at let's take a look at Bitcoin, up 4% this morning, so it's having a pretty strong pop, bounce off this 150-day moving average. We've talked about Bitcoin and Ethereum. I'm not that excited about them. Again, they have a broadening formation when we look at Bitcoin. Higher highs, lower lows. Every move carries more and more risk and a little bit more uncertainty. So again, it's just kind of steer clear of something in that formation. Broadening formations, even when you look over here, had a series of higher highs, higher lows. Eventually, it just kind of, you don't know where it's going to go. And even if it does break to the upside, there will obviously be a wave of people saying I should have just held it. But again, if you're not a long-term buy and hold investor, this type of pattern is not really worth trading. It is a high-risk trade. So I would just steer clear of it because it could end up just shaking out, doing its thing, and then eventually building something that is decent, this is one of the plays we did with our band strategy. We got a nice move right up to here, and then we got out, and then, of course, it's been really going nowhere ever since. And the key is to have clean chart patterns, something that shows momentum, clear direction. Megaphone patterns here are not clear. They are not safe. They're not a very good pattern to mess around with. Let's go take a look at the MAGs. If we take a look at the MAGs ETF in general, we are set to see them open sharply higher. Again, the MAG here has been threatening to break out. Now, this isn't showing today's price action. I can get that so we can see here. You can see today's price action, big gap up. So it's breaking out of this big pause where it's traded sideways, had a big shakeout with the tariff news. It came back up. It's set to open higher. Again, I think we'll probably see equities fade down a little bit and pull back from this gap. So I wouldn't be surprised if that happens. Typically, we see that when the momentum shifts, we get a pop to the upside. A lot of times these bridges, the market loves to gap above resistance, but then it'll fade back down before it wants to continue to go higher. So we'll see how that plays out going forward. Taking a look over at crude oil, again, it is in a long-term downtrend, still working its way down. It has a sharp bounce last week. And now the question is, it's bounced right up into resistance, into all of this noise, into the 50-day moving average. We'll see if it eventually gets sold into. It is in a downtrend. It does have red shaded bars in the background here on our 30-minute chart, telling us that this is an overbought market within a downtrend. This is typically where sellers are going to come in, and if they were long, then they're going to want to get out here and start to go down. This is also where people who want to short it or buy inverse ETFs typically would do this and expect oil to go down. So that's kind of what we're just letting oil work itself out. Again, it's had a very strong bounce off a very critical support level. You look at these lows from earlier this year, it came right down into that level and had a strong bounce. If we take a look at the US dollar index, we've got the dollar trying to carve out a bottom here. It's had a pretty nice run to the upside, a fairly controlled pullback, and you could argue this is kind of right through a fairly critical level on the chart. Obviously, there's some other highs that I'd like to see broken through here. But overall, there's this big rounding potential bottom forming. And it does look like it's turning from a set of bearish chart patterns to now it looks more so a bullish chart patterns, pointing to this eventually should work its way up and to the right, which typically means the equities markets might be struggling and start to move lower over the next couple of months. Again, we look at this pattern. This still could take a month or two to potentially finish unfolding before we start to see it have a leg higher. Of course, if this starts to go higher, eventually we'll see probably precious metals want to pull back if the dollar continues to strengthen. But we'll just have to play one bar at a time. There's no point in trying to front run and guess what's going to happen. We just follow price. If the markets are up, we're long, and if they show the strength, if they're not and they're showing weakness, we don't want to hold that asset, whatever it is. When we step out back and take a look at the big picture, just a high-level view, this is our TTI, our technical investor strategy, tells us when we are in a bullish environment, when you want to naturally be long equities. If I can get this to draw here. Here we go. When we're naturally long, when we want to avoid the markets and step aside, when to be long, when to avoid. And so last two pullbacks here was the 2022 bear market telling us to step aside, move to something else, and then eventually we had this very nice run to the upside. Then we had the recent tariff shake-up here in the markets in terms of trying to figure out which way the markets are going, and we're back into another bullish environment. So when you step back, we're still, I wouldn't say it's a fairly strong bull market, but underneath the hood, it's not everything blazing on all cylinders and taking off. The stock market, as we've seen from our sentiment charts, show that the market isn't all that strong underneath the hood. It is trending up. You got to be, long the markets if it is trending up and it meets the long-term and the short-term criteria, but you definitely don't want to be betting against it. Eventually, it will have a big pullback. It's just a matter of time. That is what the stock market does. It has big moves to the upside. It eventually has some type of correction, and we don't want to have to ride those corrections because eventually one of these will turn into a multi-year correction that can waste a lot of time and also put a lot of money at risk. Anyways, that's it for this morning. We'll see how things unfold and go from there. Take care. Bye-bye.